Greetings. This is Dr. Jeffrey Scott, and this is my weekend market update for April 10th, 2022. Welcome to those who experienced me for the first time at the Wealth 365 event, and welcome back for those who've been here before. I don't yet keep a mailing list. That may change. So if you want to get this notification of when I post these, make sure you hit the subscribe button and the alarm so you get notification. If you like this, give me a thumbs up. If not, a thumbs down. And please, comments are more than welcome. They're wanted. Help me improve so I give you more value for the time you spend with me. I know I don't charge for this, but 30 minutes on a weekend, an hour on a weekend is worth money to you. Housekeeping, because I recorded did my live Wealth 365 event in 1920 by 1080, that's what I'm using for this video. So you don't have to wait for the 4K video to come up. Let me know if you like this resolution better. It's a little bit more work because I have to change some of the sizes, but if it's easier to see on your end, I'll switch to it because I want to create value for you. From a disclaimer perspective, this is education, not investment advice. An investment requires more than a stock name. It requires a buy stop, a sell stop, number of shares, stop and target placement. It's much more than you get from a free webinar from me or from most people. So take it at that. It's education of how to use the tools and how I might use them to trade a market. I'm a doctor, not a broker. I pay for the tools I demonstrate, and trading involves risk, and you alone are solely responsible for any investment decisions that you make. That's it on the PowerPoint. Isn't that a relief? I think so. I've made them shorter and shorter as time has gone on, and it's pretty clear that most of the people are happy about that from feedback. Now, I like to look at the market. I'll come back to what I think is going on, and that we'll talk about the red bar there. Markets. If we look at how we're doing off the 52-week highs, you could see that ARK Innovation, IBD 50, Biotech, and FANG are all down big. ARK Innovation down 54%. The closest to break even on the year is $1. It hit its 52-week high on Friday and then gave us a red candle high, which is interesting. If you look at the S&P and the Dow, they're both off in the 6% range. The Russell is knocking on bear market territory again, down 19.1. The Nasdaq is down 15.4%. On the week, let me just change this to 5-day review. I took this data out of HTSI, and then I'm hitting the wrong button, obviously. Why is that not? Oh, I got to highlight what I'm sorting. And I put it into a spreadsheet just to facilitate my quick review here. And let's just look at 5-day performance. Okay. And over the last week, all the things that you don't want to see lead if you're a growth stock investor led. Dollar, gold, silver, biotech sniffing around, commodities were flat. If you look to the downside, it's the same things. ARK, Bitcoin, Innovator ETFs, bonds, FANG, and small stocks. The warehouse report allows me to take all the stocks in my universe, which is $2.50 and 250,000 shares, and then look at how they perform by certain parameters. Does earnings per share rank matter? Well, most weeks it does, but you get more earnings as you go to the right, and you get more performance as you go up. Well, all the groups were down, and you did really poorly with earnings and with no earnings, so EPS rank didn't matter. Relative strength ranks still matter. That stocks with high relative strength had less bad. Stocks that are in good groups had less bad. And if you look at ERG, because of relative strength rank and group rank, this is combining those three, there was a trend to do better in high ERG stocks, but don't be mistaken. Stocks did poorly this week. And things at the head and at the tail, there's just a few stocks here, the gray line, so I don't pay any attention to them. If I look at the indexes, the Nasdaq was down 3.9, down 1.8 on the day. It's 15.4 off the year. Look at the growing number of new lows. No Hindenburg on the Nasdaq. On the NYSE, we've got some news. Flash, news alert, sirens, flashing lights, 3 Hindenburgs in a row. Lots of new highs and new lows. Only down a little bit. How do we have HINDYs? It didn't change that much on the week. It was up on Friday. Well, here's what it tells me, folks. Hindenburg omen occurs in the setting of a market that seems to have a mixture. Let's see if I can pull it up. Hold on, I think I got it in here. Let me see if I can. No, I don't have. It's not in that. Well, never mind. The Hindenburg omen occurs when the pros are selling it to the amateurs. We're the amateurs. It often signifies a major top. There has not been a major correction since before World War II that was not pre-signaled by Hindenburg omen firing, and it only is confirmed when you get a second one within 30 days. I got 3 within 3 days. I'm concerned. I am concerned. We look at the buckets. We take the stocks in the S&P 1500. We look at where are they within their Bollinger Bands. The midline is in the middle. Nearly 2/3 of the stocks in the S&P 1500 are below their Bollinger Band. Then I look at where they are by decile in the bands, and the ones less than 0 are piling up. When they get to 30%, the market's going to reverse. Likely to reverse. It can get to 90% there. We're nowhere close to where it reverses. It can still go lower. If we look at performance on energy, you can see year-over-year energy is so far on fire. Look at the gas in Europe. But even gas here is up 150%. Coal's up 200%. And you can see oil's up 60+%. Here's the daily. If you look at metals, what stood out to me is lithium, but it hasn't been moving, which means there's something going on, perhaps because China has closed off some of what they do. And you look at one-day performance, you can see gold was up, silver and copper. Ore was down, and that probably played into some of the steel miner action. Interest rates, woof. 10-year bond, 10-year interest rate skyrocketed this week in white. 30-year interest rate skyrocketed. Then we look over here, we look at the risk spread, and when it starts to go up, it means money's tight, tough to come by. It's up off the bottom. It's not by any means high. There's no signal there. And if we look at the risk inversion, the yield inversion, the yield curve inversion, it's popped back up above the 0 line. When I go back in history and I look at every time it pulls under, it usually doesn't, the market doesn't usually sell off until it starts coming out of this condition. It's starting to come out. Be interesting to see if that actually holds true. Economic news, this is a big week. Let's talk about, use the word inflation. New York Fed 1-year and 3-year. We have CPI, Consumer Price Index, inflation. PPI, inflation. Then we got jobless claims. But then we have retail sales, import prices, consumer sentiment, 5-year inflation expectations. And then we got production on Friday. And then throughout the week, we have Chicago Fed. We got Richmond Fed. We got Fed Governor Brainerd. We got Cleveland Fed, Philly Fed. So this week looks like it could be a roller coaster. We've got 3 HINDYs. We got like 5 Fed heads speaking and tons of inflation data. Imagine if the numbers come in cold. The market goes up. But if those numbers are hot and those Fed heads are not bearish, not dovish, I don't even want to think where the market's going to be next weekend. You've been warned, but I've put both stories in there. Reason to be bullish if inflation's coming down, but concerns to the other side as well. Not a big earnings week. It's the beginning of the next quarter's worth of earnings, and Delta usually is one of the ones, JP Morgan, the banks, kicking it off. As I've said in the past, it's a choice as to whether or not you want to hold over earnings. It's just bad judgment to not know when your earnings are due. So during the wealth events, somebody, and I did have a chance to answer, asked about earnings dates. So I'm always looking at earningswhispers.com. If I get a list of stocks that I might be interested in buying this week, I'm going to be putting earnings dates on all of them. And I've got some programs that I could do that. Earnings dates are also in wealth charts. Thoughts? Still a war. News is driving everything. Yield curve spooked. Market expects multiple 50 BPS increases. We had failed breakouts. That's usually bearish. Beware bear market rallies. Multiple Hindenburg signals suggest a next move to the downside. If you don't know the Hindenburg omen, you have to make your own judgment call, whether it's voodoo or something to think about. Go read about it. Be nimble. Trade the market we have, not the one the pundits on TV think we should have. Lots of news, few earnings this week. April's typically strong markets, although we're in the worst year of a 4-year cycle. As I called out, lots of inflation data, and Fed speakers could be a roller coaster week. Save. All right, let's look at the market. Here's the indexes. Let's blow up the spiders and spend a few minutes on them. At the time, I didn't really say much about that point, which was the prior high around 462. Look to the left of that line. This is a pivot. We have failures to get there, not quite, and then we have support that came in this area as well. You know, it's never a single line. I'd probably draw a rectangle about this size. So we failed at this pivot point, which is resistance. We have now broken below the 200 on Friday. If I had to pick my target, it's the 50. I see this as a bearish looking chart. Of course, news could drive the markets one way or the other. New oil supply, it's going to go higher. End of war in Ukraine, it's likely to go higher as well. But without an exogenous outside event, I think the market's going down. At least the spiders look like it's at risk. The Qs are at a bounce point. They're at the 50. Now, do they actually knife below the 50 and close just below the 50? They did. So you got to be concerned that could be meaningful. But I'm going to, it's at a place that if you're expecting a bounce, this might be an obvious place to see it. You failed at the 200, you bounce at the 50, you're playing moving average pinball. You look at the diamonds, probably the strongest of the bunch. Above the 50s already came down, bounced, has a wealth signal, buy signal come in. Crossing my fingers, but where's my target if it goes up? Only to the 200. And then lastly, we can look at the Russell, and probably the weakest of the bunch. We'll blow that up. And you could see, let's see if maybe I won't blow it up. Try it one more time. Well, unblow it up. The Russell failed at the bottom of the Darvas box after a false breakout. It's just also failed below the 50. It's below the 200. If I had to pick the weakest one right now, it's this. So the weakness, lower two are the Russell and the Qs. The strength is probably the diamonds, and the spiders are kind of flat. And why would the spiders be flat? The spiders are flat because of market rotation. Flattest, and you'll see that in a few minutes. If I jump into commodities, in the commodity space, we can see gold has had a double top, pull back into support with a buy signal. Same with silver, or no buy signal yet. Oil pull back to support. Natural gas still heading to the moon. 10-year massive move this week. And notice how this is value versus growth. When the rates go up, value outperforms. When the rates come down, growth outperforms. Well, value's outperforming now. If we look at market themes, what is the theme of the week? This is a ratio of IWB big versus IWM small in the top 3,000 stocks in the market. When it points up here, large caps are in charge. Down here is small caps. Large caps are in charge. Even on the hourly, large caps are in charge. If I look at value versus growth, when it points up here, it's growth versus value. Up here is growth. Down here is value. Where is it pointing? It's pointing to value. If I look at the 1 hour, it's pointing to value. So large cap value, think defensive. So if it's defensive plays, what do we expect? We expect utilities, real estate, and staples. We got them. We also still have materials, we still have energy, and we got healthcare. So why is the S&P not falling down? Because although energy is sort of the king of the S&P, or not energy, rather technology from a weighting perspective is so big, and technology is getting killed. Financials are doing bounce, but still poor. Communications are poor. It's being driven by the defensive sectors. So we go into the marketplace dashboard that I like. And let's just go up to the top here. I'm not going to spend much time on how I do the sector scanner. I did it this morning for Wealth 365. I'm just going to talk through what I do is I identify the best performing sectors. So here it's energy, utilities. We know that defensive and real estate and healthcare are working as well. So I'm going to pick all of those things. All right, these are the ones. Then I hit compare, and now I get a list of all the industry groups, what's working. So I might take, the top 10 or 15 of those. There's a couple different analysis that I might do. Did that before. I didn't want to do it that way. Got to highlight this one, and then I can go down to here. And now I can go compare, and these are the stocks in the top performers, and I might just take the top 50 or 100. I then can put them in a watch list, and I can maneuver that watch list. So I did this to the long side, I did this to the short side, and we'll look at those in my scanner in a few minutes. Another way of doing the market top down on the sector side, I could just put in the sectors, and it tells me what's working: utilities, energy, materials, healthcare, real estate. All of these are outperforming with up arrows, meaning they're moving up. The down arrows show what's weakening and the things that have performance below that of the spider, which is still positive, although dropping in intensity. Or I could go even greater than that, and I could take my top-down indice group here, and I could look at it, and I could look at what's leading the market: gold, utilities, short bonds, exploration, production, natural gas, the dollar, XLE energy, ag, REITs, materials, and so on and so forth. So there's many ways of getting to the same answer. Now, in my top-down analysis, I'm going to go to my CAT scanner, which is how I automate all this. My weekend review is a list of the stocks that I thought were the best stocks of the bunch. Now let me just take off one of my filters. Show you what I'm doing. I'm scanning for stocks over 500,000 shares, at least one bullish dot, no more than one bearish dot. Let's take off the squeeze, and I'll get a lot of stocks. And as I can tell a lot by each line. Am I in a squeeze or not? Is there a compression which could cause a outsized move when it comes out of the compression? How many dots? Remember my 4 dots. Big gap up, big volume, breakouts, and momentum. Those are what I like. The more of those I have. I used to go through thousands of charts a weekend looking for certain setups, looking for those findings. I can do it in moments with my scanner. So I've ranked them by number of dots. Green candle low, red candle high. Those are signs of a 1 candle reversal. They're only meaningful to me during an extension. Bongo daily is the short-term trend direction. Bongo weekly is the long-term trend direction. High-low jump, this is the level of extension. When I see 100, I know that this stock is really extended. Look how far it is from the 17, the 50, and the 200. I might be afraid to buy that. When I see something that's at minus 100, and I doubt I'm going to see a minus 100 in a group of winning stocks, I'm equally concerned about shorting it. In fact, I might be looking to sell the plus 100 and buy the minus 100. That's when the green candle low and red candle high come in. The EMS, this tells you, is there a signal and how many days ago? And then the REMS, which I don't think I had any this weekend. I had a couple. The REMS basically are my best, what's the word I would use, conviction on the EMS, because it requires a specific pattern on the weekly, a reversal on the weekly, and a new buy signal on the daily. So I saw that on Iovance, a biotech, and LXU, which is a REIT, Lexington or LSB Industries. Maybe this is agriculture. I might have got that wrong. LXP, I think, is Lexington. So those are the tools that I use. And sorry, I hit the microphone by mistake. So I am able to rank these, and I know about the stock right away. So let's look at BVN. It's in a squeeze. That's this yellow dot here. That tells me that I'm not real extended, because by definition, you're probably not extended in squeezing, because it requires the Bollinger Bands to tighten inside the Keltner channels. I have a 3 bullish dots. So the gap dot isn't there, but I've got a volume, a breakout in momentum from a squeeze with a PSAR reversal. How good is that? And I had a new EMS signal. Now the Bongo Daily tells me I'm now in a short-term uptrend, which just happened today. And the Bongo Weekly being green, which is the second one, or the one on the weekly chart, says I've been in a long-term uptrend. I don't like counter-trend rallies. The high jump of 54.5, which is the same number you're going to see over here, tells me I'm not extended, and there's the EMS signal. I like BVN, very bullish looking chart. DBI. At first I thought maybe it jumped too much. This is a designer brands, but you know, it's been in congestion. It's pulled back more than I like. The 50 is well below the 200, but it had a 3-dot buy. But I know from experience that if I go here and I turn on the squeeze, hit apply, voila, the piece de resistance. The best stocks in the market just came to the top. BVN, we just looked at. EOG, natural gas, breaking out after a pullback to the 50 with a 3-dot out of a squeeze and a new EMS. Gold, breaking out after a pullback, 3 dots and a squeeze. Oxy, oil, breaking out. P10, oil services, 3 dots from a squeeze. RES, oil services, breaking out. So you have to make your own determination, again, of where you put your buy stops and your sell stops, your position size and management. But what I want my tool to do is to help you find stocks that seem to be setting up to break out. So I could have looked at the whole weekend review. I put together a list that I watch daily in the market that I continue to add to. It's called my combo leaders list, which is from a number of user groups I put together over the weekend. And if you look at this, the same thing, the same stocks are here, but this list is going to change over time, and this is typically a list where I get my big winners from, so I will monitor it during the week. Or I could create lists by sector, real estate stocks. 2 of them made my list. I know Rayonier looks interesting, breaking out here with 1 dot from a squeeze. Bullish Bongo and weekly. Starting to get extended, but not too far yet. Above 95. Metals mining, a bunch that we've already looked at. I could look at oil and gas because, hey, oil and gas and coal look interesting. Here's a gas and oil and a couple services play right at the top. I could see bottom fishing. Is there any biotech work in it? It's not as a sector. And if I look at biotech and pharma, Innoviva, INVA, not yet. I think of all of these, although it didn't make the schedule, the list, I like Iovance. And I like Iovance because it's broken out, had a new EMS, 1 bar. The reason why it's not in there is because of the squeeze. So if I was to take the squeeze off, I'd loosen up the criteria. And you could see on my list now, somewhere will be Iovance. Here it is. So the squeeze narrows it down. I like squeezes because typically the stocks that squeeze are not overly extended, although they can be, and when they move a lot. You just don't know when they're going to release from that squeeze. Those are some of my bullish scans. Now, bad news. By the time you watch this, you can't buy my stuff anymore. We'll have more events where we'll offer it for sale to the public. That said, you need to have wealth charts which is on special right now at Wealth 365. That ends today as well. And you need my marketplace package, which is a one-time purchase of $9.97. To be clear, Wealth Charts is an annual or monthly in perpetuity purchase that you need to have if you want to use it for the data and the access, but you only have to pay once if you want my tools. If you miss your opportunity for this week, no promises, no commitments, reach out to me and I'll ask Rob Hoffman if I can extend it to my viewers. Now, I do better picking longs, to be honest, than picking shorts, especially in a market that's whipsawing. But you want to short near when the market's rolling over is a great time to short. When the bottom market's turning up is a great time to go long. The market's far from the top right now. But I do play contra ETFs to the short side. I'm not against buying puts and shorting. So let me just show you what you could be doing. You could create a short list analogous to my long weekend review. Notice all these are in downtrends with Bongo Weekly. So these would be stocks that would be having a contra trend rally in a downtrend. So not necessarily what I would want to be buying. I don't know why that made the list. It doesn't look very exciting to me. But what I would do here is go into my filters. I want a bigger stock to short. I want less than or equal to 1 here. I want greater than or equal to 1 on the bears, the exact same way of doing it. I'm going to move down here. Let's leave the squeeze in place because maybe that'll find stocks that haven't dropped too much. And in the whole weekend short review, I didn't find a lot of obvious tickers to short. Let me show you an example of a ticker that I think looks interesting if I was going to short. And this is just for demonstration purposes. I am not advocating you short. Remember, shorting can be risky. Buying a put's another way of shorting it. You control your risk. Why did I like this as a potential short? So here's a stock, Google, in a huge uptrend. It's been in a monthly and a weekly Bongo red for quite some time. It just shifted to a daily red, meaning it's now a downtrend in all time frames. It's got a EMS signal. And the reason why it's not too late, it broke down below the 200 and the 50. It opened up here, failed again at the 50 and broke down. To me, if this stock broke down below this level, which is 26.58 or so, it's probably coming down to test 25.14. It's about a 5% move, maybe 6% move. That to me is a relatively fresh opportunity at shorting. Again, shorting can be risky. A bear market rally can be ferocious. Think about Monday. So be careful. I'm not advocating you shorting this, but that's the pattern I like to look. You see more of those as the top is rolling over. The market's beat up. I mean, is it good to short Microsoft here? I mean, I think Microsoft is maybe in that position, but look how far off the highs it is. Is it good to short Amazon in this position? It's right at support on the 50 and it's off of its recent highs. Yeah, there was a good shorting opportunity when you got the EMS signal, but it's already dropped a lot. How about Apple? Obviously, many of us probably have Apple in our portfolios. Looks better. It's still above the 50. What about Tesla? I mean, it's got a lot of support. So even though it's got the EMS signal there, I guess if you're a real short-term trader, maybe I'm not me. So I'm not a big shorting guy. I just showed you what I'm looking for. I'd rather play contra ETFs, and I have some of those on, although I'm mostly neutral in this market. And if you look at my longs, they're in energy, they're in mining, they're in gold, REITs, the defensive plays, and my favorite Wolf Pack right now. You want to know what is, and they're not fresh. CF, which would be CF Industries, a fertilizer play. Too late, but not in a bear market. Mosaic, same industry group. Bull market somewhere. IPI, another fertilizer, same industry group. As I said, I like wolf packs. Now, lastly, just go back to Wealth Scanner. In Wealth Scanner, you can see MOO is here. MOO is the agribusiness ETF. Consolidated, broke out, had a fresh EMS signal. I can go to my CAT scanner. Let's reset this to be bullish. Take this down to 5. Take smaller stocks. Change the bullish to greater than 1 or equal, and less than or equal on the bears. Probably be the same as not putting anything there. And then let's leave the squeeze on, hit apply, and we don't have, and let's go to agriculture. I'm sorry, I spoke too soon. AGRO is the one that makes it. And, you know, it's not without risk. This is a stock. Let me spread it out some. I mean, it's got to break above this trend line for me to be interested, but you had 2 dots coming out of a squeeze in a very strong industry group. If I take out the squeeze and loosen my filter, apply, IPI, and there you go. Now I know what LSB Industries, it's in the agriculture. This is one that we liked. Now it had a reversal day kind of on Friday. It still closed up on the day, way up off its lows. So that one looks interesting as well. But it's got to take out the prior, at least the open, if not the prior high. So there's my trip through the markets today. Again, I don't know for sure if you can get access to my special deal on the marketplace. Now, if you're thinking, oh my God, he's an internet murky sales guy and he's just playing games with me and wants you to buy it because if you don't, it's too late. No, that's not me. I have no control. I know Rob Hoffman's very strict on the rules that he does around sales are offered. I don't want you guys to miss out if you're interested, because I got a lot of emails, but I have to ask him. If you miss out, no big worry, because we'll have some, Dr. K and I are going to do Trading for Busy Professionals, 3 or 4 hour seminars, several of them coming up. So have a great weekend. Hope you enjoyed the shorter version, and let me know if you like the lower resolution, because if it is, I'll use this resolution. Bye, everybody.